welcome to the Mortgage Rate Weekly Market Update for the week of January 16, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. Well, last week, mortgage rates did end the week slightly higher than where they started. If you take a look at the bond chart on the screen, you can see mortgage bonds since about the December 18th have been on an upward trend, breaking through ceilings of resistance, moving interest rates lower for the last couple weeks. But then last week on Thursday, mortgage bonds tried to break above another tough ceiling of resistance, got turned lower, and then on Friday sold off again after some reports of inflation. So the trend, the upward trend, has been broken at this tough ceiling of resistance. Mortgage rates now starting to move higher. So with that in mind, we're going to recommend you take the gains you got, go ahead and lock your mortgage rate to start the week. Take advantage of the best rates we've seen in the last couple of weeks since the election, and call it a day. Now, if we break through that ceiling of resistance, then we might switch to a floating stance. But right now, we have to advise you, go ahead, start the week, lock your mortgage rate, take advantage of the lowest rates we've seen since the election. Now, in the economic news, report last week released by the Commerce Department was retail sales for December 2016. That came out better than expected. It jumped 0.6%, which is a 4.1% increase from December of 2015. This is a strong report and could signal a good, strong retail sales in 2017, which could be a strong mover of the economy. So we'll keep a lookout on that. And then we saw the producer price index released last week. Also, it's a measure of inflation at the wholesale level. It came out hotter than expected. It was up 1.6% from December of 2015, and it was up 0.3% from November. So inflation is the enemy of bonds, and in inflation we have to watch at the wholesale level and the consumer level, because if that starts kicking in, it's bad for mortgage bonds. They could sell off, which would move interest rates higher. So we got to keep a lookout on the inflation. Hopefully it'll cool off, but if it continues to come out hot, that would be a bad impact on mortgage rates. Then we saw weekly initial jobless claims come out on Thursday. They came out 10,000 higher from the previous week at 247,000 claims. But again, we've got to take this report with a grain of salt, because that's the week of the New Year's holiday on that Monday the 2nd. So this week's report will be from last week. That'll be a full report week, full WAP. That'll give us a good indication of where we are on initial jobless claims and its effect on the labor market. Now, in housing news, CoreLogic released their national foreclosure report for November 2016, which showed only 325,000 homes are currently in some form of foreclosure. That's down from 465,000 homes of November of last year. That's an improvement of over 30%. So on the housing front, housing is still doing very well, very strong. Foreclosure inventory is only 0.8% of all homes for sale. Now that's down from 1.2% of all homes for sale in November of 2015. So that's great news in terms of housing strength, but that's one of the reasons we have low inventory is there's not a lot of bank foreclosures out there on the market, and regular resale homes are not out there either. So if you're looking to buy, it's a great time to buy. This supports stronger price improvement over time. Interest rates are still historically low, even though they're moving up. So if you're going to buy, it's a great time to buy. But remember, you're going to be out there competing because there's not a lot of homes for sale. So you may not have time to think a couple days about an offer because the house will be off the market. So you've got to have a sense of urgency. You've got to know your numbers. So if you find that perfect house, you've got to be ready to write so you don't lose it. Now, other great news. HUD announced last week that they are going to lower the FHA mortgage insurance premium on the annual basis by 0.25% effective January 27, 2017. That's on any loan that closes or disperses on or after the 27th. So that's great news. That can save you some money. In the blog, we got a link to the whole article on it, how much it'll save you, all of that. So DelawareMortgageLoans.net. On the blog, there's a link. It gives you all the ins and outs, and there's a video discussing the announcement from HUD. So that is great news for FH borrowers. And then in the local news, we've got the next first-time homebuyer seminar this Saturday, January 21st. That is in Dover, Delaware, at the Dover Holiday Inn from 10 a.m. to noon. The next one in Newark is Saturday, February 18th. From 10 a.m. to noon at the Christiana Hilton Hotel. Now, you can register for either one of those events by calling us at the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.